Interest rates are constantly increasing around the world to control rising inflation. And in India too, this process has continued since May this year. On December 7, the RBI raised the repo rate by 35 basis points to 6.25%. Since May 2022, the repo rate has been increased by 2.25%. Now the question arises whether mutual fund investors should change their strategy in the era of rising interest rates or not. Equity funds or debt mutual funds will benefit from rising interest rates. Let's find out in this report.
First of all, let's talk about debt mutual funds. Whenever interest rates go up, the prices of fixed income securities fall. This reduces the NAV of mutual funds which invests in these securities. In contrast, when interest rates fall, the NAV of mutual funds investing in securities start increasing. Now that interest rates are rising, most debt mutual fund investors are still confused about what to do after seeing fall in their returns.
So in situations alike to the current one, financial planners generally recommend to invest in dynamic bond funds, liquid funds, ultra-short duration funds, low duration funds, money market funds and short-term funds. These funds have given an average return of 6% in the last 5 years. Pankaj Pathak, fixed income fund manager at Quantum Mutual Fund, says that dynamic bond funds are best for debt fund investors in an environment of rising interest rates. Investors should stick to such funds with a long-term outlook. Now the question arises, what should investors do in equity mutual funds? Because financial advisors do not consider rising interest rates to be good for the stock market. Moreover, the rising fear of recession has spooked investors regarding stock market returns. However, investors need not panic in case of long-term investment in equity mutual funds because equity funds such as large cap, mid cap, value funds and ELSS have given returns of 10% in the last 5 years. Josh Thomas, equity fund manager at Quantum AMC, says that rising interest rates are better for funds that invest according to valuations. So in the current environment, investing in value funds will be a better option for equity mutual fund investors.
Value funds invest in stocks that have good fundamentals, but for some reason these funds are currently underperforming. But these will give good returns in long term. Investors investing in value funds should have a long-term outlook.
Money9 advises that rising interest rates indirectly affect mutual funds. So in such a situation, with the help of a financial advisor, make a strategy on how to take advantage of the rising interest rates, deciding what kind of changes you should make in your existing portfolio and what new investments can give you better returns.